All right, we should be live now. All right, I'll be going over price action that was granted the availability to collect money in the market. Also, I'll be going over the price actions that was missed only on the three pairs that I look at. Not really pairs, but contracts. You have ES future, yes, ES futures, Nas, you have crude oil. Those are the only three I look at because of the volatility at times that I like them. So I have a perfect window between 7 and 11 in the morning, going into the afternoon, to collect, how would you say, my monthly revenue of my regular job. And also, just a small background, I manage Airbnbs and I'm trying to do my best to get out of it, or not even get out of it, but hire more people throughout the year so my hands can get less free and I can participate more in the markets. This is my third year going into the markets, and I can say this year I have the best understanding on how I like to read the markets. And now we're going to dive deeper into Nas, ES, and crude oil, the opportunities that was granted to take. So for me, I'm not going to go too deep on how I read the markets. That'll be for a different live, but I will go into how I would start the day, right? Looking at this price action. We're starting off with ES. Let me move my indicators list. Let me turn this to full screen. Cool. This is August's very own chart analysis of the week that just passed. This was a marvelous week. If you want to see my ratio, I can actually put that on screen. Let me talk about that now. I love to use TradeZilla. My trade win percentage is 85.7. My profit factor is 24 is 2.4. And my daily win percentage is 66. Sometimes I like to get out early, I'll just copy and paste this. Cool. There it is. This week, I only traded on 3 days. That was Monday, which is very surprising for me. I don't always trade on Monday, but I did trade on Wednesday for a back-to-back trade where I lost one, but then I got in another because I identified a change in state of delivery after collecting sell side. And on Friday, it was my last buy of the week, and I was out before 12 o'clock. Actually, I was out before 11 a.m., and let's just say this week was simplistically beautiful. And this week I was nothing but bullish. If you can do your own homework and go on a weekly time frame and identify where that PD array and that mean threshold of that PD array is, and identify your opportunity off of that. For me, this was perfect. I said perfect. Today, not today, but Monday was perfect, right? I believe this was like 50 points. Not crazy. I would like it to be smaller, but it's Monday. Monday, I do expect some wonky price action to happen. Like, for an example, before seeking sell side, I would have liked London Open to be a little more higher to rebalance this price action, but I can't be too precise on price. I learned that the hard way. I miss opportunities, and sometimes I get stopped out for being too precise. Going into Monday's price action on ES, perfectly Asian session, not as consolidative as I would like it, but price pulls down, goes straight into consolidation prior to London Open. Good price action, really good price action. London opens, trades up, sweeps sell side. This is the ending range of the last week. Here's Friday's low. This is the ending range. Actually, it'll be this high and this low. This is the ending range of Friday, right? Collected off of that low, we have displacement. It did not change stated delivery yet, but we did have displacement away a key area. You can go in your higher time frames to identify what this green line could be. But as you see, we have perfect pullback in price. Did this sweep into discount? I don't think it did. It did. Discount is underneath this 0.5 level. Sweeps that, displaces away. Perfect price action here. Perfect engagement. Price continues to rally up. Great. My opportunity is between 7 and 11. That's all that I look for. Now, my opportunities this week came through NASDAQ. But I am going over ES just to show that you can trade either one and still identify opportunities in both markets, just in case one is a little more harder to read. So, for an example, I used to not always be able to read NASDAQ, but now I am, and I love it, right? Sometimes I read crude oil. It could be a little wonky, depending what cycle but price is in. Going back on ES before I go down the rabbit hole of price action and my point of views. Here, hopefully you guys don't hear my accent, right? London's high here. Thing is, I'm looking for a displacement above that high. The thing that was a little tricky on Monday was due to the fact that we had displacement through the new day opening price. If I just bring this over, here's new day opening price. That was a sign of bullishness for me, right? Because we're disrespecting the opening price to hold price lower. We disrespected it and went higher and closed higher. And in that same run from here to here, we also collected buy side liquidity from London. Perfect price action. Now for me, I'm not expecting price to come back all the way down here. Why? Because we seek sell side here. This is this pattern here. That's what this is. That's this pattern here. I'm not expecting price to come all the way back down here when we already collected sell side and displaced higher. This displacement in the going through the new day opening price and in the same leg of price, even I know it's not, how would you say, the candle that took buy side liquidity, but it was the same leg of price that collected buy side liquidity from London. There's your opportunity at 8:05. Some people might stick strictly to 8:30. For me, I choose between 7 and 11. I tend to find price around 7 and 8 o'clock to find the best opportunities going towards the new day's opening gap or previous dealing ranges of previous sessions going back into the range. So for an example, 2 to 5 is London. Now 6 o'clock might be a little wonky. It might be a little consolidative, right? Here's a perfect example. London session just closed. Where 6 o'clock started. 6 o'clock starts here. 6 o'clock is wonky. It's not doing a lot, right? It didn't take any high, but at 6 o'clock we started in discount. Now I'm just looking for the best opportunity after 7. So that's what I'm strict about. 7 a.m. After 7, where's my opportunity? I need another displacement, but disrespecting something. So 6 o'clock is a little wonky, right? We did displace higher. 7 o'clock is here. Great. Now at 7 o'clock, where are we starting? Okay, we're starting here. Can price go back down? Go down to where though? Well, we still have this gap here. Yes, this is a gap because there's a void here. There's space between these candles. The thing is, the close of this candle is here, but the open of this candle is lower. That's a continuous void here. What is underneath that void? There's your order block. So around 7 o'clock, between 7 and 9, I'm looking for the best opportunity of getting in on discounted price. That discounted price is here. It's 735, perfect. 750, we have this action. That's what we have at 750. 8 o'clock here. Now at 8 o'clock, what is a discount array? A discount array is a PD array that is lower than what price is. Price is in premium above London. What is below London's high? You have this discounted array. So out of this leg here, if this is the start, this is the top, this is premium. Discount array is lower. Okay, if you can't visualize that correctly, here's this low, here's this high, anything below this line, there's your opportunity there. But let's say we're not, see, I just got down the rabbit hole again. Let's say you don't want to be so precise. You can get in on the open of the fair value gap, as in the opportunity was presented here and you put your stop underneath this order block or this breaker. Either one works for you. And for me, I only look to collect 4 RR. Was that opportunity there? Yes. Where did the opportunity end? The opportunity ended at 11. That's perfect. Actually, no, not 11. My mistake. The opportunity ended at 10:35. So between, let's just say this candle, at 8:05 to 11, well, not 11, 10:30, that was the first opportunity of the week. Here. Now, to me, is that simplistic? Yes, because we have displacement away from London's low. Price perfectly pulled back. If you're a fib user, you can use this fib, as in price pulls back to the 62 or the 0.5. And then you can do your standard deviations. That was perfectly at 2. 2 standard deviations away from what price did. That's perfect. You can aim there. And standard deviations is a tool that I use to identify my exit points. And that's how you mathematically identify how many standard deviations, or some people call it flips, because you're taking the length of a price action and putting it above multiple times, if that makes sense to you, if you use fib a lot, right? So here's opportunity 1. Did I get 4? Yes. Now we're gonna go down to, not down, but up to a 4 hour to identify the opportunity that was given. I believe it was Wednesday. Yes, because this was Tuesday. Wednesday is here. Now Wednesday, you see we started in choppiness, right? We started in choppiness, and London is pretty crazy. Actually, why does this chart look like this? 4 hour there. I knew there was something off about that. Now, to me, price already started a bit wonky, right? We're building off of this order block. Let me just put this line here for you. We're building off of this order block, right? I want Wednesday to start and discount. Well, we have these relatively equal highs, so this is premium. Discount is anything below that in a standard deviation. Well, not standard deviation, but quadrants. Here. You see the mean threshold of that? From here to here, this leg to this leg. There. So I need Wednesday to open up and discount. We did. And the thing is, we respected this order block here. And since we already started in discount, the only other direction is bullish. So to me, this was perfect because I identified on the 4 hour candle, this first 4 hour candle is nothing but bullish. Can I find an opportunity to now get in on, how would you say, what is the best way I can describe this? How can I get in on the AMD of the following candle? Or should I focus on, but I should be focusing on the change in state of delivery on the following candle for the upside. What does the change in state of delivery looks like? It looks like the same thing that I showed you on the previous trade. The change in state of delivery looks like this, where it switches from lower low to lower high, lower low to now a higher high, and then we need to identify how can we get in on price back down here. Is there something down here that we can get in on price? That's what I identify. So we're gonna go down to the 5 to Wednesday to show you the opportunity of Wednesday. And remember the pattern that we're looking for. Super simplistic. Now we have this price action here. The same diagram that I showed you. You have a low being made, low being disrespected, a high. Where does that even look like? We have this here, you have this here, And there's that run. There's your change in state of delivery between making a lower low, lower high, lower low, brand new higher high with displacement. That is a change in state of delivery for me. Did not look for a discounted array to build off of. And how do I know it's discounted array? Because it's underneath the mean threshold of that new dealing range. The dealing range is this low to this high. Is there anything underneath that 0.5 level? That 0.5 level is here. What is underneath that? Well, on the 5 minute, you have this fair value gap. I believe on the 15, there's something more. So we're going to double check that. Yes, that's what it was. That's what it was. You have this breaker here. And yes, you have this order block here, but to me, I wouldn't use this order block due to the fact that it's kind of large for me, right? I'm usually a bigger fan of, let's see if I can find a really, really simplistic example. I mean, it looks the exact same, so I'm not even going to go down that rabbit hole of correcting myself. But to tell you that I use this breaker here, transfer that on the 5. That was the opportunity there. And you might ask the question, why didn't I get in up here? Because you're going to see an example where I actually got in on the open instead of waiting for it to come all the way back down. It's a different one. So to me being very precise, I needed to engage with a discounted array. On that higher time frame, 15-minute discount array, I just need to watch for price do the exact same thing that it always does. This. Sometimes you might have a fell swing low, as an example here. So here's your first swing there, second swing there, and you reach for your 4 standard or your 4 RR. Let's go to the hour as well. Make sure I'm not missing anything. I know there's a trade that the 1 hour has a PD array that fits best. Now, I want to create an example for you guys, because you can trade it week by week. The exact same thing that I'm doing, you can do it week by week. So I know we're on the 4 hour, but the prime example of identifying that this closed higher away from a discount array, I need to look for a change in state of delivery down here or a displacement through the open price. So what I would do is here, I would change that to white. I'll move it over 1. Now if I go to a 5, you want to see what I'm saying? You need a change in state of delivery at this low that's being made, or displacement through the opening price. Because think about this. The following 4 hours, you should be watching for a change in state of delivery and just buy. Buy that order block. Buy that fair value gap. Michael would say busy. Going to a 5. One more. There. So the following 4 hours opens at 10, right? 10 o'clock opens into discount. Well, that's damn near perfect, right? That's too precise. And if I feel the need to double check myself, the following 4 hours where's it at? The following 4 hours start at 10, just to double correct myself. The following 4 hours here. Oh no, this is the 6. This is the 10. My mistake. So 6 a.m. So we have 6 a.m. bullish. We have 10 a.m. bullish. Go down to the 5. I know we're going back and forth, but follow along. Understanding that 6 o'clock, we need to identify when does price start to go lower. So 6 o'clock is here, right? 6 o'clock opens. We need it to go lower. It goes lower. Here's your true day opening price. Perfect. Into a 4-hour order block, we need to see displacement going above that. A displacement through the most recent high prior to seeking sell side. Let me blow this up a bit. Here's that high prior to seeking discount. Respecting the true day open, great. What is my next step? Can we get a displacement higher away from this 4-hour order block? Disrespecting the internal high, we did here and here. Opportunity zone is here. That's all that I look for. Do you get the 4? Yes. When does the 4 stop? Your 4RR is what I'm referencing. That 4R stops at 2:15. Now, for me, that is a bit too long. I usually don't hold my trades more than 3 hours. Majority of the time, the first 30 minutes of a 4-hour candle, it usually consolidates, Judas swing, and then you get in and on the change of state of delivery, and you ride it for hour and a half, 2 hours, majority of the time. The max that I would usually hold is 3 hours. There's no need for me to hold it all day. It just feels like all day, you know. I can say I have been getting into the habit of holding it longer. I've been trying it out because I'm starting to identify what some of the bigger traders do. They might hold for an entire week or an entire month due to the fact they identify the change in state of delivery on a lower time frame, but in a monthly bias or a weekly bias. So think about that for a factor where just because, let's do it here, just because last month closed here and there's an order block here, and let's just say this is a monthly candle, right? Last month closed higher of a previous month, and we have a PD array that can hold price higher. So on the monthly time frame, you're expecting bullish price action. So on the daily or the weekly, not really the weekly, but more the daily and the 4-hour, you're looking for a change in state of delivery away from this order block, and then the following couple of weeks, you could just hold price all the way higher, and then you just do standard deviations away from that swing to discount, well, from discount. So I have been teeter and tottering with that on back testing and da. I might give you the update on that because it's super simplistic. I do it already just in an hourly format, not in a daily or weekly format, if that makes sense. This was opportunity number 2. It did take a bit of time, but that 4R was definitely there. And if you feel the need to hold longer, you could have, right? Obviously. But 4R is usually where I cut it off regardless. Now we're going to get into, I think there was one more on ES. Yes. There's one more on ES where the opportunity here, this was more of an afternoon opportunity, where it was around, well, not just around, but like it was after lunch, let's say that much. We get back to this 4-hour fair value gap here. Where's your change in state of delivery? It'll be here or here. For me, Thursday and Fridays, I usually don't trade, right? This week I did, obviously, but usually on the end of the week, I usually don't trade. But you have this range where you have a low, high, taking the low, taking a high, and then failed to take that low, displace higher. There's a tiny fair value gap here, tiny fair value gap here. If you zoom in, I don't feel like doing all that. But you have price swing back down to this fair value gap, Your opportunity is here. Displacement through this high. Great. Here's your opportunity zone here. Collect that in. Ride it for 4. You can get that. I could just put that on there just to show. Put it at that. Opportunity would be underneath this fair value gap, or if you're that person, you could put it underneath the breaker or the order block, whatever which one you choose. You hold that for 4. So you would have gotten that regardless where you would have put that. And actually, no, you wouldn't have got that. You probably would have held it overnight, which I'm not doing that. Not yet, at least. That was ES. Super simplistic. Thank you, ES, for having the best opportunity possible. But now we're going to go to NQ. Who could possibly be calling me? I don't know you, so I don't answer. Let me make sure this music stays. 1 second. There. All right, cool. My music's back in the headset. Now we're going to go over the trades that I actually collected on, and pretty grateful I did keep it simplistic this week. There wasn't a lot of emotional turbulence. There wasn't a lot of second guessing. Let me take that back. There was 1 second guess, but I corrected myself literally 6 minutes later. And we'll go over that. Monday was perfect. We're coming from a discounted place already. Monday just needed to show the unwillingness to go lower and displace away, and we did. That was perfect. Monday displaced beautifully. And what was my 2 trades? Long ticker instrument, net ROI, realize R. No. Okay. I don't have the exact time where I entered the market on Monday, but I'm pretty sure it'll be down here somewhere. But either way, we see the ins and out of price this week. How here we pulled back on Tuesday's open. Perfect. By the following candle, 10 o'clock, displays higher. Perfect. From the mean threshold of this fair value gap. Great. We displace higher after that. Now we see that we don't get engagement on that until Thursday. I know everybody remembers the downfall on Thursday, but thing is, the way that we trade, the science that we trade applies all the time. The displacement that happened, that collected sell side, I mean, everyone's stop loss was collected here. That's it. End of story. Unless you kept your stop loss down here, then what's up, bro? But before we get to Thursday, we see you have displacement away from this mean threshold of this fair value gap. Perfect. Now, here we see that the beginning of Wednesday, we open into discount. Great. We come from discount, actually. We're already in discount, and price rises above. So this is when London does nothing but run higher. Now we need to identify the opportunity going away from that. So looking at this as the area of price that's going to keep price higher, we need to identify that. How, right? We see what's supposed to hold price higher, but same thing as before. Can we get this type of action? As you have a glimpse here, we do, but we'll dive deeper into that once we get on a lower time frame. Now this is where price gets wonky. Like, who would want to trade in this? I wouldn't. Maybe if I want to gamble for the day, but for realized gains, I'm cool. I don't want to trade in this, but I do have to show you there is an opportunity everywhere. Everywhere. This order block holds price higher. Thursday does get disrespected, but on Friday, it does get respected. And you have an opportunity there. Do you see this? So now I'm looking at this candle as an order block now, the holding price higher. And I'm saying disrespected in a sense like ran through. Like price got ran through. But still respected in a way. That makes sense? It's like, can I respectfully disrespect you type of price action? You feel me? Now we're going to go down to a lower time frame to break all of these high time frame ins and outs. And I'm going to show you how we traded these opportunities. We're going down to a 5, starting out on Monday. Cool. Monday is here. Asian session is here. Very similar to ES, very similar to ES. As you see, we have a change in state of delivery here. Pulls back to a discounted rate. There's a fair value gap. Perfect. London doing what we want London to do. But thing is, we have displacement above the new day opening price as well. This is just perfect. This is perfect. There's nothing else needed. I don't need to read anything else. I just understand that my bias for bullish price action is more in my favor due to the fact that there was a change in state of delivery and we displaced above the new day opening price. Flat out, that's it. So if you just look for that, I don't see why you wouldn't achieve what you really want to achieve. Now, let's go into the opportunities that I collected in for price. Now, as I told you, my favorite timing of price to enter is between 7 and 11 a.m. New York time. So what is between 7 and 11? Let's go to 7 here. Actually, let me. This is Monday. I should be able to see what time I got in on price. I really want to identify that. Also, I can show you guys my status. There. That's what I did this week. That's what I did. I had one loss this week, and that's it. So just for transparency, right? But I got in around 7 o'clock, like literally 7:05, 7:10 type price action, right? I saw the displacement, perfect. I am not waiting on price to come all the way back down to this order block to hold price higher. There's no need to do all of that. If you see all of these closes, all these candles close above previous candle, I'm not expecting it to be engaged with. I'm waiting for price to stop closing above, so then I identify that we're getting a pullback. Because think about this, or not even think, look and read at price. We don't get a pullback into a fair value gap until we stop closing above the candle that's expanding. Now imagine if you did that on a weekly sense or monthly sense. You're bullish until the month stops closing above previous month, and then once you know that it stops closing above previous month, there's most likely going to be a bearish month or a seek and destroy month, consolidative month, I should say, for simplicity. But that's how I trade. 6:15, perfect. We're coming away from a discounted price action. Well, area associé. And by 7 o'clock here, Jesus, I hope you guys don't hear my accent out of this at all. By 7, we don't close above here, which doesn't really make me too happy. But we did do this. Let's look at these two candles here. To me, we just did this. But my thing is, we didn't do it with displacement. And I'll be honest, I got in early. I got in here. And my stop was all the way down here because I've been missing my entry points by being too precise. Now, for me, I don't want to miss the opportunities that the market gives me, right? So what I do, I get in early and I lower my risk. So for an example, I get in, right? I actually got in twice here. I'm trying to see here. I got in here as well. I got in here. My first here. There. And I put my stop all the way down here. Now this one was a 1 to 2 because I was like, if price doesn't get me in or if it doesn't get cleaner, I'm okay with that. Now, where did my other option was? My other option was actually in discount price. Let me see if I could just move that down. That was my other entry here. And that was my actual 1 to 4. Actually, no, it was a 1 to 3 due to the fact I was aiming at previous session highs. That was my opportunity, and it did not give that to me at all. And I wasn't mad. I wasn't mad at it at all because I still had a trade in. It wasn't as large, but I had a trade in, and I was happy with that due to the fact I'm still getting at least 1% today. It might not be 3 or 4, but I at least got 1% today. Think about this. If you got a 1% better every day at the end of the year, you're 365% better than where you were in January. So I do take that mindset with trading where it's okay to get 1%. Some people need that 1%. But going with the mindset of 1% a day is a W in my mind. Doesn't mean I'm not going to get 16% next week. Right? The opportunity is still there. And if you don't think 16% is there, look at this run. This is 16%. 16% is everywhere. I'm pretty sure you get the gist. I don't have to drag that all the way along. But 13% was there, as you see. And let's go into my second attempt, which was actually pretty beautiful, actually. Because I looked at this displacement high. This is another change in state of delivery where underneath this low, collect it. So this is where we have this move. Again, it repeats itself, right? From this low, collected sell side, displaced away from the high that generated that sell side move. I got in here. It's a beautiful move. Beautiful move. Where's my stop? My stop is here. And thing is, once again, I'm looking for that mean threshold move. And it got it so beautifully. So beautifully. I'm going to see if I can get that. Let me see if I can get that that screenshot of price action that I took. Turn this to New York time zone. Boom. Give me 1 second as I put this on the 5-minute. I'm on TradeZilla if you don't understand what I'm doing. Anyway, okay, it's taking too long for me to get this. Anyway, that was my second and third opportunity in buying into NASDAQ on Monday. Was the fact that we displaced over a high that generated a sell side move into the PD array. So going away from this area, that displacement, I'm getting in exactly here. I am getting in on a lower risk trade, but my higher risk trade is in a deeper discount opportunity. And that's how I do my trades. and then I wait for that to be a 1 to 2 or a 1 to 4. Session high is a 1 to 1. Here, I believe that was a hour and a half run. There's your 1 to 3. Well, yeah, hour and a half run. There's a 1 to 4. It's perfect. And obviously, I have the 1 to 1 for my first trade entry off this fair value gap. That was the first trade off NASDAQ. With my temps between 7 and 11, then we're going to go into Tuesday. Perfect. Now we understand that Tuesday, if you don't remember what Tuesday really looked like. Tuesday was this. Price opening up, London session, Asian session, doing nothing but consolidating and moving lower to a discount array. This red line represents the mean threshold of this fair value gap, as you see. Now allowing that to give me a reference of price where it should reject, it should displace away from type. Now, this is 10 a.m. Perfect, right before 11, right before 12. That opportunity is still there. Going down to a 5. Now we understand what that red line is. This red line. This is me showing you that 4R opportunity. London moving lower. We move lower one more time. Consolidate down here. Now, this is late in price, but the opportunity is there because my time of entry is still live. And we're just moving down the price. And I'm buying only this week. I look for buy opportunities the entire week. Now, I'm just looking for a displacement above an internal high. You have this leg move lower, collecting sell side, right? So I'm looking for this high to be disrespected. Look over, that's where it's disrespected at. So I'm expecting this fair value gap, or here, to be engaged with. There's your opportunity, because this is your change in state of delivery here. Instead of making lower low, higher low, lower low, it doesn't make a higher high until here. We see that opportunity pulling back. There's your opportunity. You put your sell loss underneath this order block. You ride the wave. Opportunity 4 is there. You would have gotten out at 11:55, right before 12 o'clock. So technically, you could have went to lunch on time. That's there. Now we're going to our other opportunity. Go back to the 4. I guarantee you slides would have been so much smoother. Our next opportunity, I know a lot of people didn't register this as an opportunity, but Thursday had a great opportunity. Absolutely fabulous, right? Give me flowers type of attitude. This is perfect. This fair value gap was never engaged with. And if you go down to a 5, we identify what Thursday did. Thursday disrespected a lot of people. I believe this looks better on the 1, so that's where we're going to go. I believe this is it. Yes. No, that's Friday. That's here. And we're just watching for that change state of delivery. What did that change state of delivery looks like? It looks like when a internal high is disrespected by a displacement price action candle. Here's your last high here. Before that swing into the sell side, that was disrespected here. There's your fair value gap and discounted price. Price does color outside the line a bit, but you would have been fine, right? Because your stop should have been here, underneath this swing. Absolutely should have been underneath this swing. Identifying all of this price action would have been crazy. And the thing is, you still would have gotten in before 12 o'clock. You still would have gotten in before 12 o'clock. 12 o'clock is my I don't care anymore, period. I want to get in before 12 o'clock, call it a day. Now, this is where the time I would probably hold it till the end of the day due to the fact that I got in so late. So I know the following hours should be bullish. Because maybe we're on the 4-hour time frame. If I know that the 10 o'clock 4-hour candle respected a bearish order block, I can predict the following 4-hour candle to go to the upside. So I can hold that for 3 to 4 hours and identifying. Let's actually look at this. I got in here. Where is it at? For 3 hours. Let's just say 3 hours. Just cut it off at 3 hours, because that's usually like my max. My 3 hours is here. So whatever is above this, after this, I don't care. But that's my 4-hour mark. I can set a time limit for the price to automatically close at the time. 3 hours. And we're going to see how far price ran higher in 3 hours. Scroll up and see. Let me make sure I get that correct. Yes. I actually have to take it up higher. Make sure it meets its mark. There. So in 3 hours, that was a 5-hour trade. With the fact that this is a discount array, in this discount array, I'm waiting for a change in state of delivery, which is taking a internal high with displacement, watching for the pullback, and that's it. Actually, we can just fib this out. If you're a person that loves fib, I used to love using fibs, but I feel the need not to use them anymore due to the fact I just look for a discounted array. But that 62 and that 75 would have been perfect. Imagine if you did have quadrants on your contracts, as in 1 contract here, 2 contract here, 3 contracts here. So this would have been contract 1, 2, 3. Actually, let me take that back. Contract 1 would have been at the open of the fair value gap. Contract 2 would have been at the 0.5 mean threshold. Contract 3 would have been at 6.2. Contract 4, which is super deep discount, would have been at 75%. You still would have been collected in. And this could be identified as hype communication, but I'm showing you the opportunity. Discount array, chain state of delivery away, get in on a fair value gap order blocker breaker, get out at 4%. You would have rode that along. Now, what is this red bar here? What is that highlighting? Actually, I think it's possibly from the 15th. I actually forgot myself. I was looking at this. I'm like, I should probably just record this. Okay. Off of that displacement away, you have, let me take this away, it just doesn't matter anymore. You have this fair value gap here. This is a discounted price, well, discounted array here. Because out of this leg, here to here, this is in that mean threshold area. So in this area, you can identify or seek a quote unquote change in state of delivery from this area. So if you go down to here, in this area, you don't really get a change in state of delivery down here for you to get the opportunity. It is 720, I understand that, but you don't really get this as a change in state of delivery because it didn't take this high. My change in state of delivery is when it takes an internal high. It most likely did on the 1 minute, but it didn't do it on the 5, so I can't get in on that. But where is the change in state of delivery? You have this is a change in state of delivery, and it's through the new day opening price. So that's my favorite. We displaced the way we came back down. I'm expecting this price to hold higher, which is the price of the new day opening gap, and on a higher time frame. I believe that was a breaker. It is a breaker here. There's that engagement there. getting in a price. Let's just go back to a 5. You can get in on the fair value gap open here. And your stop loss would have been underneath that breaker. So let's just breakers here. Is your opportunity there for 1 and 2? Yes. Is your opportunity there for 1 and 3? No. No, it's not. You're very close. So we're going to stick to a 1 and 2. And those are all of the opportunities there for ES and NAS. Time is this? No. But there's your opportunity there for NQ. And then you guys see how I build off of price. I look for a displacement away from a discount array. I'll look for a displacement above an internal high, which is the high that seeks sell side. I look for displacement through the new day opening price. And I look for displacements above previous sessions. And I get in on that pullback. And that's how I hold my science to a T in price. It's the only thing that I really look for. And I hope you guys really did understand the way I look at price. And if you rock with it, then you rock with it. If you don't, hopefully you watch the following video and you can follow along. But I would like for you to know, I am glad to share this video. I'm going to have a smooth, simplistic night. I am going to continue to write in my book the things I could have done better this week. I might show a video as well on the book that I'm reading, a trading book, and digest it, you know, and then have that conversation with you guys on the things that I can take in and is relevant to me, and having the possibility that is relevant to you, and we can build some type of connection or bond off of that similarity, and taking bits and pieces from a book and identifying that it applies to the both of us at the same time. I wish nothing but the best this year for you. Same for myself. My Father's watching over me. My Father and God, I'm saying. This year's going to be a great year. Let's let this hype of this BTC ETF cool down. We already know that there's going to be a drop down from this. Everyone's hype. I'm selling the hype. I pulled my profits. You should have as well. I say pull your profits before landslide happens. Remember, before price goes higher, it goes lower to seek people who did not collect their liquidity. So let's watch this landslide. Get in at the low. Watch for the change in state of delivery, because price stays the same. It has a very similar characteristic between the 6 sisters of ES and NASDAQ, and let's just say BTC acts the same. It might color outside the lines a little bit, but hey, price action will be price action. Have a very, very wonderful night, a smooth night. Enjoy.